Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, perception is reality. We're going to explain in this video. Let's dive in.
Trade Genius.
Hey guys, we got Black Friday specials. They're really cool. We have the best pricing for the year. You can get our basic package, our advanced packages, our VIP rooms, software, trade options, trade crypto, trade the futures. With us, get our indicators, best prices of the year. Take advantage of it. Thanks for listening.
Bob, people perceive to be in pain, which is opposite of what the stock market would lead you to believe.
Yeah, there's a big difference between what they're showing you on Wall Street and what's really happening on Main Street to people. And this is less of a stock market thing, and it is more, I think it's going to be kind of seismic over the next, 5 to 10 years, is that people are feeling like they're sliding down the slope and their wealth is being destroyed and their standard of living are being eroded. At the same time, they're told 180. It's classic gaslighting here. I want to show you the first chart here. This is what I'm talking about, is that you have the average 401k retirement account balance has basically gone up $1,000 on average over the last 3 years. At the same time, CPI of what you even measure is up 19%, but we're probably looking at close to the 35 or 40% increase in the cost of living in the same time frame. So people are feeling it, and you can see it. And before I show the next chart, you said something funny to me before we got on the air, which I think it deserves you sharing with everybody else, because this is one of those narrative breakers that people don't understand.
Yeah, if you look at the price appreciation of, say, Bitcoin from Q3 2018 to Q3 2022, what you're going to find is that had you had taken all of your 401k money and converted it into Bitcoin, your 401k would be up 1,000%. That's pretty incredible. And so I think it just goes to show you that, yeah, you can, I know there's a lot of people that can't get their heads wrapped around Bitcoin as something that they would have in their portfolio. But the fact of the matter is it continues to eat the inflation monster up. It appreciates faster than inflation. And that's another argument I hear too, is like, oh, well, if Bitcoin's going to say $1 million, then houses are going to be $50 million. No, because if houses are $50 million and Bitcoin's going to be $150 million, you can chart anything you want against the price of Bitcoin, and every asset against the price of Bitcoin will be in a terminal decline. I don't care what you chart against it. There are some exceptions that will oscillate against the price of Bitcoin, which means you have these little windows of appreciation, but never are you going to see a long-term chart against the price of Bitcoin over the last, 10 years that have outpaced Bitcoin's appreciation. And that appreciation is going to squeeze harder because as we go into the next halving, right, we're going from 900 BTC being produced a day to down to 450 BTC produced a day. All the while, we're now introducing ETF flows that will bring, trillions of dollars of market cap. So, it's not rocket science here. This is a very easy math equation, and it's going to continue. So just a little side note on, when you're not convinced that Bitcoin is something you should have in your portfolio, every 4 years, it reminds you that you would have been better off accumulating it in the previous cycle.
Yeah, and this wasn't really the purpose of our video, but it just makes a point that you have to open your thinking if you want to kind of get ahead of this wealth destructing model of the current and probably future administrations, because they're all going to be protecting themselves. This next chart is really wild. It blew me away, and that's why I want to talk about this today, is that, they keep telling us no recession, no recession, no recession, no recession. They threw out this bogus GDP thing of 4.9%, which, we know it's a bunch of garbage, because it's, even if they were telling the truth, it's still nominal, right? Versus actual, that they make it look like, wow, good 9%. Yeah, but inflation went up 5% too. And so you didn't really get anywhere. And this chart here kind of shows it, is that this is really people's real personal income per capita, and it's plummeting. And we're almost at the lowest we've ever been, which is really scary. At the same time, the cost of living is going through the roof. So people they're going to be bursting out of the seams with anger. And that's what people talk about, populism. Remember, populism comes in two forms, right? It comes when the communists go crazy and try to rebalance everybody. Unfortunately, it always rebalances everybody to be poor. But then also you get the rise of the populist right, who basically wants to just oust the people who cause these issues. And I think we're going to get a little bit of both on this, Phil. And it's going to cause a problem with our economy in particular because we depend on non-essential services to drive GDP. And we're basically tearing those down, in terms of what assets are going to outpace it. People used to count on their home as kind of the piggy bank, if they're not going to get the income for it. Well, that's out the door for the next 10 years minimum. So they don't have a place for their money anymore. At the same time, their incomes are not exceeding that of the cost of living. So people are going to have to downshift their life, but they're running into a brick wall. It's called moving out of an area into a less desirable area, number one. And number two, they're running into all the rich people owning second and third rental properties out there that are keeping the prices too high versus being able to downshift into a less expensive home, and take off the mortgage. You're now trapped into a rental loop. And I think these are things that are psychological to people. I know there are times in my life where, you're just scraping by to get by. Every time you start a business, go 2 years without income and see how you enjoy life. Okay. It doesn't happen. You don't like it. It's all you're doing is working to survive. And you only really people get contentment is that they could do things with the money that they're creating and not just to hand it off to somebody else just to feed themselves. And I think you're getting these situations now where more and more people are falling into this and they're going to get angry, especially if they're told, it's raining and, it's clear outside and it's pouring rain on them, So I think, when you get these disconnects in expectation, it's the worst thing that can happen to an economy and politics, and especially if they keep getting caught lying, Phil. So I thought I'd show this thing. It's pretty wild. Look, and every time it dips like this, the real recession comes in, and I'll stop talking. But I mean, on my view is we've been in recession for over a year because it's not outpacing economic output is not outpacing the cost of living. That's my definition of a recession.
Yeah, and this is just another chart in a string of charts that we've been sharing for the last 6 months that all of the readings, for example, personal income per capita here, exclusive of transfers, this is that orange line. You look where it is coming down into every time we get a recession, which is those gray shaded background sections. We're in recession. Same with the blue line. Blue line's as low as it's ever been going back to the 60s, real personal income per capita. So there's no way you're in a bull market here. And again, the stock market is not the economy, but it does eventually catch down to what's going on with the economy. So I think that it's going to be inescapable for the market at some point. And I think, like we've been telling you guys, with the way this market works, it's all about the flows now, right? It's all about hedging flows, and those things have a shelf life. Well, the current shelf life for now is because of the positive year that we've had year to date, will carry over into about mid-January, maybe a little bit longer than that, but probably not much. And then I think you're going to see people hedging for a recession. I think that's what the bigger play is going to be. And that's why I'm very watchful or mindful of the relationship between the bond market, or simply just TLT versus the SPY, if you're just looking at your stock tickers. And because when that diverges and holds and you see TLT bolting and SPY dumping, that trade, I mean, with the exception of a few weeks of where they don't do that, will carry on for probably 8 to 12 months. And you're better off just going all into TLT at that point versus a stock portfolio, because that will be what appreciates over that time period.
Well, I mean, look at Phil. I mean, since the middle of November, we had that 2 or 3 day just rip-a-thon. We've gone nowhere.
Yeah.
I mean, look, you and I sit in a trading room all day. I might as well just sleep all day because after the first 2 hours, they pin it. I would argue that the hedging has already begun. Mm-hmm. And big money is now selling calls, and they're doing whatever they need to do to start positioning themselves out of these trades.
Right.
Because look, we're not the only ones with this great idea. Jam Croissant just told 1 million traders out there what he thinks is going to happen. And big money's already front running that, and they're going to be positioned for those flows to stop at the middle of January, or they might be muted all the way through. I had a horrifying dream when I woke up that maybe the market does nothing till the middle of January. There's nothing in there that says it has to go higher. He's just basically saying don't expect it to go lower. Now, I think it will probably go higher because there's maybe too much money coming at the end of the year, but it's not going to be like what people think. And you're talking, we're talking 200-point move maybe. That's it.
Right.
To get us to new high. It's not like we're going to be jumping 20% here,
right,
to blow out the top. I mean, we're within 3 or 4% of the all-time high, which is a nothing burger. If you're carrying a huge portfolio for your retirement, you might as well start getting yourself prepared for the nuclear winter that's coming.
And you could also pull back into the very last part of December as well. And then your first 2 weeks of January, you kind of see that bounce too. So it can be a little tricky. But the point is that we're probably going to have tailwinds for the latter part of December, very latter part of December into the middle part of January. I think that much is pretty consistent. But in between now and then, could be, Bob's right, it could be range bound, could be choppy to down. I think we owe 4,500 a visit. You know, there's a lot of reasons why this thing can be stuck in this area for a while. So, but I think rubber definitely meets the road latter part of Q1 and definitely Q2. And you know, June's usually a swoon down, and maybe that's, you know, a similar playbook, I guess, to 2022 maybe, you know, but we'll see. Because if we do get a recession, though, I don't think we're going to get these rallies that we've been seeing where they've been very, you know, strong rallies. You do get rallies in bear markets, don't get me wrong. There's a number of bounces in 2008, especially the back half of 2008. We had some pretty strong bounces, but you had a hard time getting over things like the weekly 9 EMA. You spent most of the time was under that, versus now you're most of the time we're over that. So that's going to be the big difference. And I think it's going to cap a lot of those moves. And I think this market, if we go into that mode, is going to be in a scenario that we haven't seen for over 10 years. And a lot of traders, this generation of traders hasn't seen. And it's going to probably ruin a lot of people that aren't ready for it.
Yeah, absolutely. And we have a really interesting show for you tomorrow, too. Something's happening in Japan that you absolutely have to pay attention to.
Yep.
It's potentially really, really scary.
Yep.
So stay tuned for that for tomorrow. With that, Phil, hit like, subscribe, check out our service. I think you'll like it. We have some really good tools. You know, no matter what Bob and Phil blather about, indicators of price matter more. And, you know, our system, you know, will put you in the right side of a trade all the time and keep you from losing money, too much money if you're wrong. So tradelikeagenius.com, tradegenius.co. And like I said, tell your friends and help us grow the channel. Thanks for listening. Bye-bye.
Trade Genius.